Welcome to the Private Lenders Podcast with your host from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, thanks for checking out the show. We do appreciate it. We have some special guests today. We have Sourabh and AJ from ABS, the makers of the Mortgage Office. You probably hear us talk about the Mortgage Office a lot because it runs a good portion of our business. It's important software to our operation and to that of many private lenders out here. And we've been planning to have this conversation for a while. I think we have some cool things to talk about. I appreciate you guys being here.
Hey, thank you for having us. Nice seeing you guys again, and we're excited to be on your show.
Yeah, sure thing. No, there's some cool stuff coming, and nice to meet you virtually, Sourabh. Of course, we've known AJ for many, many years, but if you guys wouldn't mind, could you do a little background, a little intro on yourselves and what your role is at ABS?
Yeah, sure. I'll go first. So I'm AJ Poulin. I'm the CRO. I used to say I'm one of the new guys here, but I guess that's long past. I'm on year 25. This is my first real job. Is the story. And our company, when I joined in the year 2000, I was employee number 6, and we're 10 times that size now. And most private lenders in the US use our system, which makes us very proud. And our software is also installed in 35 countries.
Thanks, AJ. Hi, I'm Sourabh. I head product and partnerships at the Mortgage Office. I've joined only about a year ago. So, just to give perspective, AJ's been around forever from my perspective. And I've got a long history, background in technology. I worked for about 7 years at Google and then worked for a bunch of venture-scaled startups in the Valley. Nice.
We appreciate you being here, definitely. Where should we start? I'll start. I'll start with a little story.
Yeah.
So, as people have heard on the show before, we closed our first loan, HMB, in December of 2007. In January or February of 2008, so just 30 or 60 days after we closed our first deal, we were on a plane out to Vegas, going to one of the few industry conferences. And just a month or two into the business, we met AJ at that conference. And we weren't ready for the Mortgage Office yet because it cost some money. And at the time, we didn't have any of that. But we stayed in touch. We hung out. We saw each other at industry events, and we moved to the Mortgage Office, probably 5 years into business, something like that, 5-6 years, something like that. So it's been many years for us, but yeah, one of our original industry connections.
And I will say that we did try other things before that
along the way,
and they all failed miserably. So we jumped on ship with the Mortgage Office, and we've been happy ever since. Shameless.
We love that. We always tell people that we're not always the first product people buy, but we're always the last. And I had a guy that he had bought 4 other systems before he bought ours. And he once a year for 4 years. Wow. And I'm like, why don't you just buy ours the first time? And he goes, well, it cost too much. I'm like, well, what if you add up the other 4, and your time? And he goes, don't rub it in.
Yeah, that. I mean, listen, you learn from mistakes and you learn from that. And, through the Hard Money Mastermind, we've shared our experiences with a lot of folks, and we tell them when they're ready or not ready. Because here's the thing, if you're only doing a few deals here and there, it doesn't support the cost of it. And that's true. But if you're treating this like a full-time business and, you do have a good handful of outstanding loans out, it does make sense. And our new joke that we say, you probably never heard us say this, but it actually makes money for us because it helped us, and again, we haven't really publicly raised capital in a long period of time because as a private lender, if you're not at this point yet, but capital kind of just raises itself because, it's, every day we write a new loan, every day we get paid off an existing loan. So the capital grows quicker than the deal flow does. But, when you're still at that capital raising point, just having the automation and the stuff in place and the contacts, when an investor gets paid, they're getting an email from us, they're getting automated, money from us, ping, and it's potentially then getting a text from us. So, you can't stay away, you can't stay away from it. It's easy for that to happen. So when you're trying to grow your capital base, it works that way.
So that's awesome. Jason, that's music to my ears. The funny thing is a lot of companies, they have like 5 or 10 loans in the books. That's when they call and they kind of wait us out. And then maybe at 20 loans in the books, they call and say, I need some way to manage this stuff, right?
Sure.
But they had a lot of them had that similar experience, which is that once they get this, the right system in place, it kind of feeds off itself, right? So it's easy to raise capital. It's easy to put deals together. It's easy to show performance to somebody who wants to invest with you. Reporting, bank reconciliations, all that stuff associated with managing a portfolio. And then not that you weren't professional, but it provides a professional appearance to the outside world. And then next thing you know, companies are adding, dozens of loans every single month, right? And that's awesome, Jason. That tickles us to no end that you guys had that experience. And
yeah,
love that.
No, absolutely.
I just want to add. I just want to add to AJ's point there. I've worked for many software companies, and I find it really amazing how passionate our users and customers are about our software. Like some of them literally live in it and spend their entire day doing transactions, looking at reports, getting stuff done for their business, right? It's just amazing how deep they are in the system.
Yeah, absolutely. And one of the things we were talking about offline was, software isn't the sexiest topic, but like if you're a private lender and you have your own money, or if you're raising capital from other lenders and you're making an arbitrage, and you're in essence, responsible for their capital, it is a sexy topic because it's important. And I think a lot of our audience and our listeners are real private lenders and real hard money lenders out there, and that is something that's important for them. The whole back end, right? As a hard money lender, you need access to deals, capital, and systems in order to do so. It's an important part. So
it's critical.
Yeah, I mean, just the sheer amount of keystrokes that you're saving yourself and your team, like, because we've done it both ways. I've done it the QuickBooks way, in the spreadsheet way, where like every individual payment is another, set of keystrokes. And then once you get on the ACH coming in, ACH going out, like it eliminates just 98% of them, basically. Like once you get to scale, it's a no-brainer for sure. And that is sexy, saving yourself.
Well, I can sexy that up a bit. Even so, this is a true story. Gentleman was an investor was gonna invest with a company, right? He's got, okay, I just sold my business. I got $10 million to invest, and I'm gonna shop around and see where I can invest my money. I feel the most safe, right? And he met with this guy he thought was the kingpin at the time, and he went to sit down and how would you manage my loans and my money? And the guy showed him these spreadsheets, and he goes, so all of my money is in this spreadsheet and with the formulas that are macroed and that okay. He's like, all right, I'll let you know, right? And then he had a lunch meeting the next day with one of our customers, and he said, well, here's how I manage the system. And he logged in, showed him, there's a portal. He could see all of his loans. He'd actually put his loans in, hypothetical loans, returns, making 11% a year on his investments, new investment offerings, ACH zapped into his bank account. And he goes, I would love to have you do business with me. And basically he gave him the whole 10 million to invest in that one company. The other guy was like, the reason I know the story, because the other guy called me and he goes, I just lost this huge investor and I lost one of your customers. So I'm buying your software today. And he ended up doing very well too, right? So the raising capital aspect, I know there's Wall Street money, it's kind of flowing very free these days, but the smartest customers also have access to capital the old-fashioned way, whether it's a mortgage pool, private investor, mom and pop, retirement funds, yacht club meetings, and things like that. And I think that's critical. Having the right system helps raise capital for sure. So that, to your point, I think is very sexy.
No doubt. Sourabh, so let's talk about some AI stuff. You hear AI, you might not think AI in the private lending servicing software space. Like I think a lot of that stuff, it sounds funny. So, what are some things that, mortgage offices has in place, or in essence, in the process of doing?
Yeah, great question, Jason. So I'll talk about a few things we've already rolled out and few things coming up, right? So we've already rolled out an AI assistant to our customers. It's called ProPilot. It's very exciting. it was born out of a need. Like our customers would have new employees getting onboarded all the time, and it's a huge lift to train them on something as powerful as doing all the actions they can do on the mortgage office. So we had these customers coming back to us again and again and talking and saying, hey, can you train us? Can you give us more sessions? Can you give us more training? So we built this AI assistant which parses through all our knowledge base, which looks at all our content, videos, everything, and gives them the answer right there. And it's got this feedback loop. So if you keep asking questions, it just keeps getting better as they play with it. So that's something we already got in the system. Coming up we are actually in the process of rolling out advanced analytics, with which you can play around with your data and apply various statistical and machine learning techniques and do a whole bunch more, right? Like widgets, customize your views, etc.
Yeah, I mean, there definitely, as you're saying that, I'm thinking about what I look at, what I do. I don't have too many keystrokes that I have to do because we have a full-time person running the system, but I look at a lot of stuff. What are some of the portfolio metrics or something like that might be existing or new that lenders can implement and use that they might not be aware of?
Well, think about it this way, Chris. Like, let's say, Chuck Hershon over at Fidelity Mortgage. Anyway, he's called Uncle Chuck. He's been in the business 50 years. He was like our second customer in 1979. He's been using the system ever since, right? And he goes by every property. He knows every deal inside and out. And he has a wealth of knowledge that nobody could really duplicate, right? Well, we want to try to duplicate him. Because if a new employee starts and they sit in the chair, how can they get 50 years worth of knowledge of due diligence, underwriting, deals that went south, why they went south, red flags that were overlooked, and all that experience over a 50-year period, right? So where we'd like to go as a company is to be able to have that data from this customer be able to help the users, whether it's underwriter or whatever phase of the stage of the doing that deal is, help them, guide them through the process of, is this a loan for you guys, right? So for example, let's say that in the past 10 years, you did 2 deals that were 70% LTV in this county for under 300 grand, and they both went south. Now, does that mean that deal that's on your desk is going to go south? No, but it might want to raise the flag. You might want to do more due diligence on that puppy, right? So where we'd like to go as a company is not just the data from our customers that they're gathering over the years, which ones did better than other deals, which ones went south, but also as a broader overall, being able to understand what the market's doing in general as far as your underwriting guidelines are concerned. I mean, right, Sourabh, isn't that basically where we're going to be going?
He might be frozen.
Absolutely, you
Sourabh,
hit the nail.
Oh, there we go.
Not just that. Sorry about that. So I'm visiting a customer here, and I'm sorry, I'm on their premises, and my internet could be a little spot as we go. But AJ, I heard what you said. You kind of hit the spot there. All of that, and also the ability for our customers to start visualizing the art of possible. So right now, when they look at stuff, they're used to looking at reports, like which look at how is my loan officer doing, or how is this part of my portfolio doing, how are these type of loans doing. But once you put like this entire power of low code analytics in front of a customer or a user, now they can start thinking of stuff that they haven't thought of in the past. And I think that's the real power that we want to put in front of them.
Same with margins, right? Same with, actually, let me ask you guys this. Is there a specific part of your neck of the woods, the East Coast, the monopoly that you have over there? Is there a particular niche or part of that area that performs better than others, that has better deals than others, that has more opportunities than others? I mean, yes, right?
Yeah. If you're talking about factors around location, geography, property type, value, average like purchase price, average resale price, like I would love to have a clearer picture of all that. Like we kind of know it from doing it for 15 plus years, and like we can, if you do this enough, like Uncle Chuck, like you get to a point where you can predict the future of what's going to happen with this loan because you've seen it so many times, right?
That's right.
But if people could have that without putting in the 15 years, that would be pretty cool.
Right. That's right. That's kind of where we want to go, and that's basically. And we've done step what? There's about a 4-step process, and we're on step 2 right now. But the idea is that somebody can sit in that chair, and then by following the system and looking at the data that's already been put into the system over the years, help guide them to better underwriting decisions and where they should be focusing their energies. Like you guys, like you said, you 15 years, you already have it, but how do you duplicate you guys? You can't. We're gonna try. Yeah, we're gonna try. Yeah.
Oh, that's interesting. Yeah, I didn't know this conversation was going in the direction of like an underwriting algo, but that is super cool.
So where in your software does underwriting play a spot? So we don't use the origination module. I mean, full disclosure, we only use the loan servicing side of things. You know, we have our own kind of internal systems that we created through Google and spreadsheets, stuff like that for origination side. So is this something built into like the origination module, or like do you guys have underwriting modules? Like how's that set up?
We got to talk. So you guys are using our loan servicing product. That's our big seller. We rolled out a very cool origination product. I think it was 4 or 5 years ago now. That's been a big hit, and it's super slick. It's pulls credit and does your e-signatures and all that stuff. But the best part about it right now is the risk assessment, and the risk assessment is user driven, right? So, for example, let's say that what we were talking about earlier, where some regions are better than others, loan amounts, LTVs, and things like that. You put a weight on, we're trying to duplicate you. You put a weight on each of these factors, and then it goes into an overall scoring of the deal, right? So that's already in place. That's in our origination system. Now, right now, the scoring is a little primitive. You know, it's like green means go, yellow means think about it, red means stop. Or unless you're driving Boston, red means go too. It doesn't matter. But that's where our energies are focused on the underwriting side, which is more data, better decisions from an underwriting standpoint. So that risk assessment is going to get beefed up big time with this, with Sourabh and his team pumping all these energies into the tool.
Yeah, thanks, AJ. We look at this. If we just take a step back on this, in my opinion, AI today is the equivalent of a hammer, like a beautiful golden shiny hammer looking for a nail, right? That's how a lot of people treat it. We are not going down that path, right? We want to focus and be connected to our customer needs, the biggest pain points. We want to think a little more with our customers on what is possible, right? What can they do? So just like getting more specific on that path, we think of like 3 big buckets that AI can be used in, right? The first one is processes. You're going to do a lot of back and forth with your broker, with your borrower. You're going to ask for information. You're going to ask for documents. There are multiple people involved. They have different security controls, stuff like that. Now, all of that can be automated with AI, which learns, right? All of that could take the mental load off the loan officer or the processor that's doing all these actions. So that's one big bucket. That's process, anything to do with communication and process. The second one is recommendations. Now think of Netflix. When you log on to Netflix, it says, hey, you know what? These are your favorite. This is what we think you're going to like, right? Now, when you log on to your system and you enter some basic parameters of a loan that, you've just come in and you're looking to price it or move it forward, your system should tell you, hey, these are similar loans with similar characteristics you've done in the past, and this is their performance, right? So that's the second bucket that we are playing in. And the third bucket, I think you touched upon it briefly, is predictions, right? Now I have a portfolio, it's got a certain characteristics. Some of my loans could get into delinquency. Can my system start looking at my data and make these predictions early? Can it start serving reminders to communicate, to address the situation ahead of time? The prediction bucket, I think, in the long run is going to be the most powerful. I mean, if I'm going to tell a quick story on, I don't know if you've heard about this. Have you heard about how Target used machine learning way back in 2012?
No, I never heard
If you
this.
haven't,
No.
let me tell you this story, right? So Target started sending out mail to a teenage girl, a teenage girl with recommendations of stuff that you would buy when you're pregnant. And the dad called up the store and he was furious. He was like, "How dare you send this to my daughter?" And they said, "We don't know, our algorithm did this. I'm sorry." And they put apologies out there. A store manager went to his house and apologized. And 2 weeks later, they discovered that she was indeed pregnant.
I heard that story.
Right? So they kind of basically put together this learning algorithm, which was looking at all the purchases they were making and inferred that this event happened, right? So that's the power. Like, if we can use it there, like, why shouldn't it be like, hey, what are the best opportunities in front of a private lender? What are the best, how best should we manage the portfolio we are servicing? There's so many use cases in our industry that can benefit from this approach.
That's awesome.
Yeah, I'm thinking about all the different ways that could affect lending, from marketing up front, throughout origination and underwriting, servicing on the back. And it's kind of like my head's a little scrambled because as you bring this stuff up, I'm like, man, we could see this,
right,
we could see that. And also, like, it would, like we were started to talk about before, like, it would help us duplicate us. Like, if we could have, for the purpose of expansion and stuff, like, we have other business partners. That's how we were able to expand to different geographic markets just outside of DC Metro. And it's been a process, and it's an ongoing process to train people, consult with them, deal to deal. I think technology, the right stuff, could remove some of those barriers to expansion.
Oh, Chris, yeah, not just that, but something you had mentioned earlier about the number of clicks you're going through to do a certain function and stuff, right? So one of the things that Sourabh, we're beta testing this with some of our clients already, which is, step one was this pro pilot, especially like your assistant. Step two was, if you want to do, let's say you want to run 1098s for the year, right? So everybody's required to do 1098s. The threshold was 200, and then you had to e-file. So anybody under that would just do the old paper way, right? Well, they changed that from 200 to 10 this past year. So anybody that's got more than 1098s to print out and send to borrowers, you've got to file electronically according to the federal government. You don't want to mess with them, right? So in our system, you can upload and it does all that stuff automatically. It'll mail it on their behalf. So, but for customers that are new to us, that have their loans in for the first time, they don't know which buttons to press, right? So we created these workflows, and the workflows are, I want to do 1098s. How does that work? And you click the button and the arrow goes, okay, go here, click this. Awesome. Go here, click this. Great. Just review that. Go to next, go here. So on the screen, it walks you through with these red arrows, the entire function of that process, which is new to an employee or a company, or other processes, payoffs, things like that. So that's already, we're rolling that out as we speak. But even above that, we're rolling out the automated workflows, right? So this is the hands-off thing. So instead of giving you the arrows of what to click, we're going to make assumptions based on your prior behavior and your prior needs and what buttons you pushed before, that when you click that button, it actually is going to press through all for you. So you put your hands up like this and you look at the screen and it's moving around and things are happening and things are being sent and you're not even touching the keyboard. So the first time Sourabh rolled that out to the team and we're all sitting there watching this, we're like, no way, that's the coolest thing I've ever seen. I've been doing this a long time. That's insane. And again, it goes back to the new employee and cloning you guys. Imagine if you could take all of your knowledge and experience and your daily processes at your business and put somebody in the chair and hit start, right? So it's not gonna be that easy, but we want to make it easier to get those people up to speed. So
yeah, because I'll tell you what we do inside our business right now for that, and it's a pain because we haven't had that much turnover in our, we call them a controller position, in which essence they run TMO servicing for us. Yeah. But we've had 3 people since the beginning, and like Chris and I know how to use TMO pretty well, but like we're not in there doing keystrokes every day, and like I gotta potentially would take a screenshot to remember how to do some things, like sophisticated stuff. I'm not talking about like processing a payment. I'm talking about like, hey, I have an investor I have an investor that wants to get bought out of this loan and I want to replace them with this one and I want to, whatever it is, stuff like that. And in essence, we would just take videos of us doing it or our prior person doing it, and then we cataloged. We have it. We've cataloged TMO transactions and we upload them in our Google Drive. So it's just like, hey, how do you create a payoff statement? How do you do this? How do you do that? How do you do this?
Oh my God.
Because then anybody else can come in and be like, hey, you're onboarded, right? Call TMO to get onboarded, or like instead of us training them, but whatever. And then they're onboarded. And then when they have one-off transactions that don't happen every day, processing payments, ACH, notcher files, stuff like that they do regularly, it's not a big deal. But there's always those one-off things. And it's just like, I forgot how I did it because it was 2 years ago. So that's how our process is. So if there's a way that AI can, have learning tools to be like, this is how you do that.
Jason, if you go right now and you go to ProPilot and you ask them to search for it, it could give them a step-by-step workflow of like exactly how to do that task.
Yeah.
You guys beat us to the punch.
I gotta look into ProPilot. There's stuff we're missing.
Well,
I mean, because we're not in it every day. We don't need to
rest on our laurels, right? We always got to be coming up with the next cool thing, and that methodology has served us well over the years. So we can't rest, right? We can't just
I
say,
think
we're number one. And,
sure.
I think ease of use is important, especially for a sophisticated piece of software where your whole business lies. I think that's important because it's not. I mean, listen, when you're talking about data, it's crap in, crap out, right? You put in, I've seen too many private lenders, hard money lenders, and when they go in there, it's just like, hey, let's just put the basics in because I'm busy and I don't have anybody that runs this full time, so I'm just putting it in, and then there's just so much inconsistencies. And like Chris and I will dive in and talk to the some of our consulting clients about it. It's like, why did you even set it up like this? Like what? And they're like, yeah, like it's kind of just like a reminder token of. And it's like, okay, I mean, I guess for each their own.
Yeah. You're never going to eliminate the human element, but you can mitigate it and manage it. So,
well, and as you grow and scale, like you can't have one-off situations anymore. Yes. Like everything's got to be consistent, and you got to follow the formula the way it sees fit. And sometimes there is a learning curve of like, hey, my brain doesn't think like that. We're always asked lenders all the time, like, why did you make it so it was set up like this? And they're like, well, that's just the way that I. Like for instance, I'll give you an example, and I'm not saying this is right or wrong, but like for instance, there's lenders that every time they do a loan, the first payment's due 30 days from the date that they close, and so inside their portfolio, all the loans are due on different dates every month.
Yes,
and that's just what naturally their brain said, and for right or wrong, and like to us, it's like that's dumb as hell because all of our loans are due the first of the month, and very, very easy. You can look at 250 loans at any given time and tell you who's late, who's not late, what the setup is. If someone calls you, say, when's my loan due? The first of the month. And there's other lenders that have big portfolios and they're all just one-off. Some people, it's like, oh, it's due the first of the month. I'll collect upfront interest, from the end of the month, instead of doing back interest like a regular mortgage loan and like what we do, like interest in arrears. So like that's just how somebody's brain works. It's not right or wrong, but I think it's important to, I think just like anything else, it's important to just get the system molded on a high level first, figure out, what your defaults are, and then map everything consistently.
That's awesome.
That is definitely a common theme in our mastermind group in the inner circle of trying to get people to simplify things and standardize them as much as you can. Like what? Like for example, like why is this loan amount $301,500? It's like, why'd you do that? Because it's exactly 65%. Make that shit 300,000 and make everyone's life easier.
That's funny.
And I think Chris, I want to say that's a very, very important point in the sense that consistency and those principles lay the foundation for you to be able to use AI, use data, use anything, software or scale in the future, right? Go ahead, AJ. I think you were saying.
Yeah, I was going to concern. Jason's story made me laugh because you have any idea how many times I heard that story that, you want to go through life without any regrets, right? And we wish that's the goal. You don't have any regrets, but of all the private lending customers that we have, the number one regret for all of them that they didn't make all the borrowed payments due on the first. right? that they wish they could just go back. Again, some of these loans aren't short term and they're not off the books. They might be longer, 5-year, 10-year, whatever. And now that I'll do it later. But like you said, now you've got due dates throughout the month, every single month, 12 months a year. It's a nightmare. You can never really take a snapshot. So number one regret is making all loans due in the first. Number two, get all borrowed on ACH.
Oh yeah.
Right? Get them all on ACH. It's not an option. It's just, if you want to load with HMB, we require auto debits. It's going to save you time. No signing checks. You don't have to worry about it. We're just going to go in once a month on the first and get your payment out. You don't have to think about it, right?
Yeah, 100%. Like we require
and the
that
reminders, text alerts going out saying, hey, that's coming out on the first. I know it's the first soon, but just a reminder, it's coming out on the first, right? But those two regrets, customers just wish they could go back in time, right? And so thankfully you guys figured it out early. You guys, we should hire you guys. You guys are you're writing the playbook here. It's fantastic. Great.
We'll be like new client trainers, onboard people for you. Be like, this is how you have to set it up.
No, but see, you're doing the right things, and the other thing is like, as far as investor relations, there's some things that people wish they did with new investors. Like sometimes new investors are nervous, right? They don't know you from Adam, whatever. And, they need that interaction, right? So one of our, many of our successful customers, before an ACH run is going to go out, twice a month, at the last second and fourth Friday of the month, they'll call each investor, or they'll have everybody in the office call all investors and say, hey, we're going to zap $4,800 in your bank account. Yep. How you doing? Things good? Okay, great. Just want you to know, check it out. It's coming your way, right? Just that interaction with an investor from an investor relations standpoint. And from them doing that, so many times they say, you know what? Hey, I'm glad you called. I got some extra cash. I got a tax refund. I sold my Ferrari or whatever. Do you have any deals I can invest in now? Because I've got some, you have anything I can look at? As a matter of fact, we do. We've got a very nice deal. You get first dibs. So that investor relations standpoint too. So, I guess that's the great thing about what you guys are doing. You're providing education from a boots on the ground perspective to people in the industry. And it's not just regulations and rules and, who's got the biggest portfolio, right? It's boots on the ground, how you do this stuff. So that's why you've got such a big following. And, kudos to you guys for building that empire.
Yeah, thanks. No, I appreciate you saying that. In essence, what we did was we created the mastermind group that we wanted to join in 2008, right? And it wasn't there. And there is a little bit of training and consulting type of stuff in the industry over the years, but not exactly what we thought there should be. And so that's what we've tried to do here. So I want to switch gears real quick before we wrap up. Very cool product stuff. I'm sure, we're going to be diving more into it now that I'm aware of some of the stuff that's coming along and that's even existing in the TMO that's on my other screen right now. But wanted to switch gears real quick because you guys have a unique perspective on the industry in that you talk to your customers or lenders, a lot of them private lenders, right? And you have probably a very good pulse on the market, what's going on, what people are doing, specifically related to our niche of private lenders and resi and small balance commercial. What are you guys seeing? What are you hearing? Oof. What are the people talking about?
Well, they talk a lot. They're talking a lot more now than they used to. Obviously, the rates had a negative impact, on the private lending space. A lot of our customers last year, not the entire year, but a good chunk of the year, they might have been down 30%. Some were down 40%. What I saw were the companies that had their own capital did better than the ones that had their, one funding source, a capital provider on Wall Street. And I also saw that, I don't want to mention company names, but there were companies that were, let's say, large private lenders. They outsourced their loan servicing functions to a third party, and they had one capital provider. And there's a long list of them that are no longer in business. They were the lowest LTV, or the highest LTV, most aggressive deals, they're not with us. And you guys are, and a lot of our customers are still doing quite fine. So it does seem like people have adapted to this higher interest rate world. was a little bit of a shock, and it kept going up and up.
Mhm.
Now that it's stabilizing or not going up as much, people are kind of getting used to these rates. The other thing is that I saw last year was with these small commercial banks, a couple of them going under and worry about them, going under in the future. A lot of that lending shifted to commercial lenders. So our commercial lenders did much better than our rehab lenders last year, and which we didn't necessarily see coming. So, and then the other thing is, it's funny because you guys started your business just before the downturn.
Yeah, kind of right in the middle of it.
Yeah, right in the middle of the meltdown.
Yeah.
So, who knows what the future holds, but I do see the increase in consumer debt, even though it's not directly related to lending. That's happening in part due to inflation, because everything costs 2, 3, 4 times what it used to. And it's affecting people on the lower end of the economic spectrum. And with these crazy rates, there's no supply. The loan, the only thing I'll say is we have customers calling us, they're going to start offering HELOCs. And the only thing I remember from 08 was that everybody and their brother had HELOCs because they were trying to cash in the equity of their home to pay off some debt. And so there's little troubling signs there. So I don't mean the sky's falling, but there is a vibe from our customers of buttoning down the hatches, right? Strengthening their underwriting guidelines, no risky deals right now. And there's just an overall vibe of, let's get our systems in order and let's not take over the world right now, right? So if you're looking for an AJ assessment of the market right now, that's kind of what I'm seeing.
I mean, that's great intel. That's great. A lot of that stuff that Jason and I discuss and we suspect, but you actually see it and you hear from the people out there. And I think, controlling your capital, smart, responsible lending, don't scale to the point where, where you're going to take losses. You can't control it. You don't know what's going on. I guess just, do responsible business and have control over your operation, and you'll do well when others aren't.
That's right. And it's funny because the largest customers that we had in 08 are no longer with us. And there was a bunch of potential customers on our radar this time around that are no longer with us, right? And what we see that's fascinating is I always say the private lending is the second oldest profession in the world, right? And there's a reason why, because people always need to borrow money, right? So, but the people that have the most solid business structure that are not trying to take over the world, but just, staying in their lane and just sticking to their guidelines and not trying to take over the world, they tend to do better over time. And it's fascinating to see after 25 years, these turtles that win the race, right? And these rabbits that get run over. So fascinating.
It is. Yeah, we have been and are continuing to be kind of turtle-like, and it's okay. It's okay. Sometimes you see the high-flying companies at 5x volume in 2 years, and it's, we've seen the cautionary tales. We've been around for long enough. We all have. But no, really cool stuff about the product, software, your perspective on the market. We definitely appreciate you guys being here. Anything in closing, or where can people find you if they want to reach out?
Yeah, sure. Easiest way, go to our website, themortgageoffice.com. Just fill in your name. You can do a demo. We'll show you what we have. If you like it, you can buy it. If you don't, that's okay. And but we'll show you what we have. Yeah, the best way to find us. And thank you guys so much. We really appreciate this. We're really such big fans. Well, anytime that anybody's new to the industry, we point them to your podcast. It's if you want to get up to speed quickly on the industry, this is where you need to go. So I find
Nice.
What you guys provide much more beneficial than the regulation and compliance and all that stuff. You got to deal with it, but that's not where you learn the business. Your podcast is where people learn the business. So kudos for what you do for the industry.
Thanks a lot. No, we definitely appreciate you saying that and for being here. We should do it again. Once some more stuff rolls out, we should hop on the podcast again. All right, guys.
Let's do it.
Thanks again. Sourabh, AJ.
Thanks, Jason.
Thanks for being with us. Everyone, we'll see you next time on the Private Lenders Podcast.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word.
Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.